Hello, this is James Smith at GannAnalysis.net. Today I want to talk about gold futures. We're looking at the March contract, soon to be the April contract, but keep in mind 1484, that's the where March closed on Friday, but the reality is April is the active contract and it's already above 1500. So this line, since this particular chart is tracking spot futures, GC spot, it means that soon you'll see this thing will move up because we're really going to be tracking the April contract soon. So the point I want to get across here from a Gann perspective, from this low to this high is the swing, and the price distance is kept the same because we're squaring the range by price, but we're using a scale of 10 points per month, which means this one by one line declines 10 points per month. Where it crosses the level of the prior swing low, that completes the square in time. So you can see that the 1 by 2, this green line, is half the slope of the 1 by 1. The 2 by 1 line is twice the slope. That's how you create the square. All of these lines are related back to the 1 by 1, whatever scale you decide to use. And granted, a lot of people say that Gann is subjective because you can change the scale. Well, you can say music is subjective. Beethoven is subjective. Just say that you should never listen to Beethoven because he's subjective. Well, the point that these guys are missing is that we're trying to find the rhythm of the market. And it's like find the right scale in music. You're trying to find the right rhythm. And we found it. These circles show us where you're getting hits. So a high here, sort of a lower high here, a low, and we believe right now you've got a low. Now, granted, you got above this retracement at 1613. There was a chance you could go to new highs, but what stopped it was this 1 by 1 line. And, this is the beauty of Gann. It relates time and price. And most other disciplines in charting just ignore time. They just pretend like there's an X and a Y axis, but as far as they're concerned, there is only one thing to track, and that's price. So trend followers, that's how they work. They say, look at the trend, ignore time. But if you look at anyone who draws a trend line, there's a slope to that trend line. By definition, most trend followers will use a trend line. So there is an X and a Y axis. You have to be conscious of how time and price relate to each other. That's all I'm saying. If you believe in trend lines, then you believe in Gann, because Gann is really a trend line. The only difference is, with a Gann line, you are consciously aware of the slope. So it's like, you're arrested and you tell the cop, well, I didn't know that was illegal. He's not going to forgive you. And the same thing with the market. If you pretend that you don't know what the slope of the line is because you don't believe in time, that doesn't make it legal. It makes you stupid. I'm just saying, look at this. You're hitting a major high here, a lower high, and halfway through the square in time, you hit a low. And you start moving up. And what happens? The 2 by 1 line gives you great support. Well, guess what? There's a good chance, if you bought gold now, that it will go up. Nothing's guaranteed. You could take this out and go down to 1302. That's entirely possible. The difference is that we know where support and resistance is. We know this is resistance. We know this is support. We know this 1/4 division of the square down from high is resistance, 1613. It stopped the market here. It may stop it again, but if it takes it out and it takes out this former high at 1704, well, guess what? You're going to new highs. That's all we're saying. We do not have a crystal ball. We don't know what's going to happen next, but if you do look at the square of the range, it gives you some insight into where the market is in relationship between time and price. And the fact that we closed just slightly above it, this line here was about 1483. We closed at 1484. So the reality is it's respecting the line on a closing basis, closing weekly basis. I think you're going higher, but let's see what happens. Watch this market the next few weeks. If it starts getting above 1613 and 1704, you have to assume it's going to new highs. If it takes out this support here at 1483, chances are it may be going down. So keep an open mind. Let the market tell you what it wants to do. If it looks like it's going to break down, you're going to know because you're going to see it violate this 2x1 line. If it breaks to the upside and it closes above 1704, you know it's probably going to new highs. So keep that in mind. And note also, Gann believed in seasonality. So the fact that we're just completing, we had the winter solstice, which gave us sort of a low here. We took off. Now we have the spring equinox. We sold off into it, where chances are we're going to start a big move up. That's what Gann is about, time and price. The chart here, you can see, gives us support in price terms. And this chart here, with the spring equinox on March 20th, Friday, just yesterday, guess what? It's starting to move up. If you get follow through to the upside, you have a good chance of a rally. Now, there's one other thing that Gann did, which is especially interesting. He used something called the square of 9, which I'll show you in a minute. This is an output page for the square of 9. We start from the low, and we measure degrees of movement higher. And every 360 degrees, we have a complete circle, complete revolution around the square of 9. And you can see here a low, a high. It's bouncing, it's vibrating to the square of 9. Well, what the heck is the square of 9? This is the square of 9. You can see how at the center you have a 1 and you start going out and out and out. You can Google the term square of 9. You'll find plenty of stuff on the internet. For today, I just want to point out one thing. Look at this number, 1464. Look at this date, March 20th, 21st. That's the spring equinox. They are on the same, they are equated with each other. They're in balance, time and price. Well, 1464 on the static square of 9, which means that we're measuring degrees from the center of the square of 9, which, again, let me go back to the chart and show that to you. 1 is the center. You do one complete revolution, that's 360 degrees. You do another one, that's 720 degrees. You keep going out and out and out. And that's what we've been showing you on this chart. Only difference is we're measuring from the low rather than from the center. That's called the dynamic square of 9. And we're using 1 point as the price unit, which is what the normal square of 9 would use. So here we go, 360, 1261, 1363, 1470. That's 3 spins around the Gann wheel. And guess what? That's a higher low. So 1470 on the dynamic square of 9, or if you measure from the center of the Gann wheel, it'd be 1464, which I just showed you. 1464 is 180 degrees from the date of March 20th in time. So what you have here is time and price in opposition to each other. They're in some sort of balance. And what Gann said is that when time and price are in balance, look for a change in trend. It could be that maybe gold sold off to 1388. That would be in balance, or it could be 1464. In this case, 1464 is the level we're interested in because, as you saw on that prior chart, it found support at 1464, which is 180 degrees from the start point, which we showed you was on this side of the Gann wheel. So you do halfway around the circle is 1464, halfway is 180 degrees. If you did a complete revolution, it would be 360 degrees. So that's how that works. These numbers over here are 360 degrees. These numbers over here are 180 degrees from this starting point over here. And just to give you a better view, you can see it's a complete circle. That's 360 degrees. It's just I've zoomed in so that you can see the numbers a little better. So that is a quick and dirty lesson on Gann. The reality is there's a lot more to it than what I've just shown you. These are just a couple of the tools that Gann used. And the important thing is when you're doing Gann, you have to look at a lot of different charts. And it's that culmination of looking at a lot of charts that gives you perspective. So Gann used a lot of different tools. He didn't use one or two. It's very difficult to do Gann. It's very difficult for the reader to follow a Gann analysis. I'm trying to give you a simple example here. You bounce off support at the time of a seasonal change date, the spring equinox, and you're doing it as you're bouncing off a 360 degree line at 1470 on the dynamic square of 9, and also bouncing off 1464 on the static square 9, which is a 180 degree line. So the point is, you get a couple of charts and it starts to form a picture. You start to get an idea, hey, maybe gold is forming a low. Now, it doesn't mean you can trade this market willy-nilly. I'm providing this for educational purposes. And I'm not saying that this is 100% bulletproof. You could go out and buy gold on the 23rd of March and see it drop below this level and just crater. That's possible. But if time and price are imbalances, then maybe it's going to go up. And if you get above, say, 1541, you have a better chance that this thing is real. So oftentimes you don't necessarily go out and buy just because it looks like it's forming a low. Maybe you let it prove itself. You let it get above 1541 and then you start buying. And you keep your size small. You know, money management is still going to be important because this is a very violent market. It can go up. You can see this. It can go down very quickly. So you don't really want to bet the ranch. You want to have money management. You want to have stop somewhere below this. You don't want to go crazy on it and say, well, this is going to work every time. Of course it's not going to work every time. So I'm just showing you that if this line holds here and you start moving up and you get above that 1541 level on the square of 9, maybe you can start looking for a move to 1613 or 1704. And if you get above that, maybe it's going to new highs. So nothing is ever guaranteed. But I think there's a good chance that gold is going to go higher from here. But keep in mind, I'm just showing you this for educational purposes. I'm not telling you to go out and buy gold. I'm telling you this so you'll understand a few of the Gann charts that a lot of people use. And if they say, oh, spring equinox, now you'll know. You sold off into it. Hey, that's the reason why some of the Gann chartists out there will be telling you look for a change in trend. And because we sold off into it, you have a better chance that you're going to go higher. So I hope this has been helpful. And I know you got a long weekend here of, worrying about coronavirus. Maybe this will take your mind off it and you can look about learning a little bit about Gann will help you in your trading. And hopefully we'll see better times to come and get over this virus quickly. Thanks a lot for your time.